Earnings season. Two words that can make any analyst's heart race. The late nights, the endless manual updates, and the constant pressure to deliver timely, accurate insights. It's overwhelming, but it doesn't have to be. With Delupa, you can revolutionize the way you work. Their automated model update solution takes the manual effort out of the equation, delivering complete, accurate, and real-time financial data at the click of a button. No more endless spreadsheets, no more scrambling to keep up. Delupa empowers you to initiate coverage faster, refine your investment theses with confidence, and focus on what really matters, identifying key opportunities and delivering actionable recommendations that drive results. Plus, with fully auditable data, you'll always have the confidence that your insights are backed by accuracy. So if you're ready to get ahead of earnings season and take your analysis to the next level, visit delupa.com/COMP today. Delupa, because your time is too valuable to spend it on data entry. Welcome to the Compounders Podcast. On this show, we explore the topic of compounding from various angles, including through interviews with public and private company executives, investors who focus on compounders, and newer investment firms that are building a business they hope will become more valuable over time. All opinions expressed by your hosts and the podcast guests are solely their own opinions and do not reflect the opinion of SNN or its affiliates. This podcast is for informational purposes only. It is not investment advice and should not be relied upon for any investment decisions. We are not recommending the purchase or sale of any securities. The host and guests may be beneficial owners of the securities discussed. You should not assume that the securities discussed are or will be profitable. My guest on the show today is Nic Johnson, the founder of Listwise, a company that is trying to revolutionize how residential brokers get paid when helping clients sell their homes. After spending many years at PIMCO as a portfolio manager, Nic founded Listwise in 2022 to help create better alignment between home sellers and their brokers. In this wide-ranging discussion, we covered what led Nic to start Listwise, the problem associated with selling a home that the company is trying to solve, how Listwise incentivizes brokers to get the highest price for a seller, common mistakes homeowners make when they are selling their house, and how the company is attracting customers. And without any further ado, here's my conversation with Nic Johnson of Listwise. Nic, you've had a diverse set of experiences in your career. I'm curious to hear the story of how those experiences led you to decide to start Listwise.
Yeah, I think I've always been interested in finance and kind of financial incentives. So, that's kind of, I guess, maybe one common thing that's out there. Before starting Listwise, I worked at PIMCO for almost 20 years. So my background is very, very much in finance. I've always been, involved in real estate, kind of buying, selling homes. And after being at PIMCO for 20 years and kind of having a successful career, I felt like I'd like to do something a little bit different. And luckily, I was fortunate that I didn't need to, kind of keep doing that day in, day out. And so when I thought about what am I interested in and what would I like to explore, I've always been interested in kind of more entrepreneurial activities. PIMCO being a large organization is a great place, but it's a different vibe. And so the idea of doing something entrepreneurial was interesting to me. And then also, kind of solving a problem and kind of focusing on financial incentives in something that I'd experienced personally, like buying and selling houses, and always thinking like, oh, there's got to be a little better way. To me, it was really interesting to be able to kind of try to popularize a better way for people to do things, and just to try to solve a problem that I've experienced, and that, at least from talking to my, friends and coworkers, a lot of other people have too.
And when did you know this could be a business versus just, an experiment or a hobby or something? What made you think that you could scale and grow and kind of devote the next stage of your journey to this?
Yeah, I think a couple things. One was, we had talked about something very close to Listwise, which would get into, kind of a better way to pay real estate agents. Kind of a couple of years before I left PIMCO, a friend of mine was selling his house. He was a portfolio manager at PIMCO, and he was talking about it. I was so frustrated and about it, and he was like, "This is what I want to do." And we were like, "Yeah, that is exactly the right way to of how you should pay your agent to give them the right financial incentive. That's what you should do." And so, for a couple of years, we would occasionally talk about this, think about this. And then, after leaving, I've been gone and left PIMCO for several months. And I was talking to my co-founder, who owns his own real estate brokerage. And I was explaining this to him, and he was like, and so he was like, "I love this idea. and he started to talk about, how he thought it could work. And so then we thought it just made a lot of sense to start it. So I think it was kind of the combination of one, I had a friend who owns his own real estate brokerage who saw a lot of commercial potential. And then two, the fact that I no longer, kind of had a day job, those two things kind of coming together, kind of allowed it to click. And we thought, this is something we could do as a business.
Sure, and we're gonna go deeper into the business side, but I'm curious about what it's been like for you personally, going from a firm like PIMCO with a lot of resources and some level of bureaucracy to building something that's in the very early stages of its lifespan. What's that experience been like for you?
It's interesting. Someone once said to me when I was working at PIMCO, and they had a startup, and they said, you take for granted how there's always paper in your printer. And I think I kind of laughed, and I was like, yeah, I guess I do take that for granted. It's a different, like, you experience that kind of viscerally. So PIMCO, when I think about what I did at PIMCO, like, I focused on a very narrow thing. I was a portfolio manager. So my job was to generate alpha, to outperform a benchmark. I managed a large hedge fund, several other mutual funds, and it was really clear, right? I am supposed to generate really good investment results and add alpha. And if I do that, then the salesperson, and the client relation person and all these other people can do their jobs because I did my job. And so, and everything else, I kind of ignored. And if other things don't work, it's like, that's your problem. I make alpha and I did that. And so I'm done. Whereas when you're at Listwise, whether it's like travel or meetings or, communicating with clients, marketing, like all of that is now something that I think about. And so that's given me a lot more appreciation for all these other roles. When I was at PIMCO, people who did marketing, it was like, marketing, oh, that's such an easy job. Can you imagine how hard it is to make alpha? Or, sales. Oh, you just take people out to dinner, oh, isn't that such an easy job? And now that I do them all, I have so much more appreciation for all these other things. I'm like, oh my gosh, marketing and sales, they're so much harder than I ever imagined. So one, the biggest difference I think is I was at a very narrow remit, and now it's very broad, which just gives so much more appreciation for all the value that kind of everybody brings to make these big organizations work.
Yeah, no, totally understand that. So I think that's a good time. This is a good time to dig into exactly what Listwise is. So for people who are not familiar with the company and may never have bought or sold a home, how would you describe the business and the business model of Listwise?
Yeah. Okay. So let me tell you first, like, what do we do? So what does Listwise do? So we basically help homeowners create, and actually, let me back up. Okay. So what do we do with Listwise? So when you're selling a home, you're going to pay your real estate agent a commission. And that commission is usually a fixed percentage. What we do is we help homeowners establish an incentive commission structure. So instead of it being just a flat percentage, that number varies. And that's helpful because it better aligns the agent's financial incentives with the homeowners and should produce better results. So we help homeowners, we do all the work to do that. And then we also help owners put multiple agents in competition. And so at a high level, that should drive down fees. So that's what we do. Really think about like incentive commissions and competition. And we help homeowners do that. And so from a business perspective, how do we make money? We make money. Homeowners don't pay us for that service. We basically take a referral fee from the real estate agent. It's typically whatever that real estate agent, if a homeowner hires a real estate agent that we helped, set up this with, we will take 10 to 15% of that agent's commission. And so the agent is the one who pays us out of the share of proceeds that they ultimately get. If a homeowner doesn't hire anybody, that we found or we don't think it's good, we just end up not getting paid. So we're basically betting that we will be able to, find an agent and help them establish terms that the homeowner finds attractive, and then we allow, and we'll take a piece of that agent's commission.
And if I put my, agent hat on, It's really nice to get a flat commission guaranteed. It's the industry standard. I don't have to pay referral fees if I find the customer. So I guess I'm just trying to understand from the agent's perspective, what is their incentive to work with you and to accept a variable commission structure?
Yeah. So a couple things. One, if you think about it from an agent, like in an ideal world, yeah, you wouldn't pay a referral fee and you would take a flat commission. Like in an ideal world, yes. The fact is that there's a lot of competition, right? So there's like 2 million agents in the US. There's about 4 million homes that get sold, like existing single family homes. So, that's 2 transactions per agent. Like that's not that much. Agents spend a ton of money on advertising, being top of mind, and every agent is trying to convince you that they are the best. And so if you're an agent, right, you're sitting there, well, I'm gonna mail you flyers. I'm gonna go knock doors. I'm gonna do and I'm gonna try to tell you why I'm good. And what we always tell agents is, we are a way for you. If you're really good, we're a way for you to basically bet on yourself and put your money where your mouth is. So instead of saying you can say as an agent, you might, I want to make 2.5% on this transaction, and a homeowner's sitting there saying, well, I don't know if you're worth that much. If you can sell a home for maybe 3 or 4% more than another agent, maybe you're going to work harder, maybe you're higher skilled, maybe you're better at marketing. If you can do that, I think every homeowner would be glad to pay you 2.5%. And so for an agent, what we're really saying is, this is an opportunity for you to bet on yourself. If you're really good and skilled, this is a way for you to convey that skill to the homeowner. This is a way for you to say, right now, how do you compete? By getting your name out there or lowering your cost. But maybe you don't want to lower your cost. Maybe you're I work really hard. I'm really good. And I think I'm worth that. Well, this allows you to actually get paid based on the result you deliver. And so that actually might allow you to command a premium fee because it's so tied to your results. You're not saying, just trust me, it'll work out. You're saying, no. If I deliver you X, I'll get 2.5%. If I don't hit that, I might only make 2 or 1.5. And so it's that alignment of incentive. I would argue, as an agent, it can allow you to basically earn a better thing because it's tied. You can basically monetize the value you add. And so that's what we always explain to agents, is saying, you don't have to just go to a homeowner and say, trust me. You can say, I'm willing to bet on myself, and you'll pay me based on the results I deliver. And that's a good pitch for agents to be able to make.
And for any new business to be successful, it has to solve a problem for consumers or provide a service they value. From a high level, what would you say is the problem with the standard compensation system for residential real estate agents?
The problem is it doesn't work well for homeowners, right? So like you said, where you started, it works great for agents, right? I mean, if you say you have $1 million house and you're going to get 2 or 2.5%, you know what you're going to make. I mean, to pick 2% because it's round, if you make $1 million house and you're going to get a 2% commission, that's $20,000. If it ends up being 1.05 million, it's a little, it's 21,000. If it ends up at 950, it's 19. But you're making roughly $20,000 once you get that listing. That's very known. The problem is the homeowner. This doesn't work very well for the homeowner because the homeowner doesn't have all the information about how good of an agent you are. And there's actually research on this. So a well-known economist looked at Chicago real estate transactions. They looked at hundreds of thousands of homes, and they compared homes that agents sold themselves. So when they sold their own home, to when to homes where the homeowner hires the agent. What they found is that agents, after controlling for square footage and neighborhood and all these variables, agents' own homes sold for almost 4% more than the homes that they were hired to sell. And agents left their own homes on the market for almost 2 weeks longer. So agents, when they're selling their own home, are a little bit choosier in the offers. They negotiate a little harder, which makes sense. They're getting all the upside. When you're hiring somebody and you just give them 2% or 2.5% or whatever this percentage is, you're only giving them this small little, so they don't have a big incentive to try to grind out every little bit. If they get a good offer, their incentive is to try to get you to take it. And so they're not really working on your side. And so I would say that the big problem that we're trying to solve is, as a homeowner, you have all the power in this relationship. You're the one who's writing the check. You're the one who determines how much you pay. You have all the power. But homeowners don't know how to exercise that. They don't know what to ask for. They don't know how to, negotiate better terms. The only thing they know is maybe just ask for a lower fee, but that could come with its own problems. Like now you might have adverse selection. You might get a worse agent. Maybe you saved 1%, but if you get a really crappy agent, you're kind of penny wise, pound foolish. So what we're trying to solve is this: as a homeowner, what's the thing you should really ask for in order to get better results? Because people are pretty unhappy with real estate commissions in general, but they don't know how to solve it. Sure. And so our goal is to try to tell them, like, here's a better way to do it. Here's how to solve this problem. You don't want to pay you think you're overpaying an agent. You're not sure you're getting value. Here's a way to address those concerns.
And, for somebody who's thinking about selling their home for the first time, what are some of the common mistakes that you think homeowners make when they sell their homes?
I mean, the number one biggest one is that they only speak to one agent. So, over 80% of people hire the first agent they speak with. Selling your home is probably the biggest financial transaction, one of the biggest ones of your life. Certainly the biggest one you'll do that year, probably maybe that decade. And so this is super important. And if you're gonna do that, like, get more than one opinion. Speak to 3 different people, because you have a view of what your home is worth. That's subjective. It's, you're not an expert. Like, how much can you get for your home? You have an idea, and that's important. But get some other opinions, more than one. And then also, not only, does that help you better inform your value, but also you can say, well, what rate would that agent charge me? How much do I pay? And that's once you get multiple quotes, you can also start to use that to negotiate people. So the biggest one is to just speak to multiple people. That would be the biggest one that I think most homeowners, the biggest mistake most homeowners make.
And so, you mentioned in your initial response about what this company does is facilitating competition. Maybe just describe that a little bit, how that specifically works, how you get a homeowner to engage with multiple agents via your platform so that they're not relying on that first interaction and relationship.
Yeah. A lot of times, it's kind of confusing. So, like, people find it a little bit confusing, maybe hard to understand what we do. So let me back up and kind of walk through what it kind of looks like. So let's say you have a home, like we talked about earlier, like $1 million, like a house that's $1 million for a round number. And we're both in California, so this is like kind of a typical value also for a lot of houses. So if you have $1 million house, what we'll do, and we really do all of this. We communicate with the homeowner, but we do all these steps. The homeowner just kind of lets us take care of everything, and we kind of present this all to them. But what is it we do? So if you have this $1 million house, we make appointments with 3 to 5 agents to come and see the home and give the homeowner the proposal for what their incentive commission structure would look like. And so an example might be, a low percentage commission, say 1%, up to like $950K. And then that agent will earn typically like 20% above this price that they're comfortable with. And they set that price, say $950K, based on what they think they can get for the home. So they're like, this agent looks at it and says, I think I can get $1 million for that place. I'll put my participation price, this price, at $950. And if I sell it for $1 million, I'll get, 1% of $950 plus 20% of everything over. So 20% of $1 million minus $950 is $50K. So 20% of $50K is $10K. So all in, that agent's now got 2%. And they're like, I'd be happy with 2%. And so that's what one agent will propose. Another agent will come in and say, like, meet the homeowner, talk to them, be like, I really want this listing. I did one next door over. It sold really fast. I think I can get like $1,030,000 for this. I'd like to make 2%. I think I can bid like $980 and set my participation price at $980, and I can still hit my 2% target. And I'd be pretty happy with that. Okay. And so now as a home, and then, we'll do this for another agent or two. And so as a homeowner now, you've got these different terms. And one agent says 950. And why do they put it there? Because they think they can sell it for $1 million. Another one's like 980, and I think I can get you 1.03. And so as a homeowner now, but if they hit their objectives, you're paying them both 2%. But if they don't, and so this is the nice thing, this agent says, I think I can get you 1.03. If they don't get that, you don't pay them 2%. If they only get you $1 million, now you're paying them, 1.3%. And so the amount you pay is basically contractually tied to whether or not that agent delivered on what they said they would do. So as a homeowner, you can have a lot more trust in your agent, but the way that competition happens is basically by setting this price where each agent would like to start to participate in that upside of, kind of getting a more meaningful share of the profits. And agents all know they're in competition, right? So they can't just lowball it and be like, oh, I want to get 20% over 800K, because they know they're in competition against, a few other agents, all of which are pretty high quality. And that encourages them to basically put their best foot forward, just like any market-based solution would.
Earnings season. 2 words that can make any analyst's heart race. The late nights, the endless manual updates, and the constant pressure to deliver timely, accurate insights. It's overwhelming, but it doesn't have to be. With Dulupa, you can revolutionize the way you work. Their automated model update solution takes the manual effort out of the equation, delivering complete, accurate, and real-time financial data at the click of a button. No more endless spreadsheets, no more scrambling to keep up. Dulupa empowers you to initiate coverage faster, refine your investment theses with confidence, and focus on what really matters, identifying key opportunities and delivering actionable recommendations that drive results. Plus, with fully auditable data, you'll always have the confidence that your insights are backed by accuracy. So if you're ready to get ahead of earnings season and take your analysis to the next level, visit dulupa.com/COMP today. Dulupa, because your time is too valuable to spend it on data entry.
And if I think about this whole ecosystem and, the fee pie or the value, kind of the value pie that may be shifting here, I mean, is this about in some ways creating transparency and incentives that shift more of the, or maybe reduce the fee pie for agents overall? Like if you were really successful, is that the outcome of what you're trying to do? Is that part of the ethos here, which is like we're trying to save homeowners money? I'm trying to square that with the fact that you need to partner with agents and they need to want to work with you.
Yeah. I think that if if you play this forward like many, many years, and you could see that happening, because this does create greater transparency, and it does increase competition. And so many years from now, that totally could be the case. One of the things that I like about this is it's a market-based solution, right? And so we're going to allow people to compete and see where things settle. But generally competition does drive down costs. The problem, as I see it today, is existing solutions. Like you have Redfins and you have discount brokers that are coming in and they're trying to drive down costs. And people are generally think that they pay real estate agents too much money. The issue is that if we only focus on cost without any sense of value delivered, we're kind of missing the most important part of this. It's like if you were hiring someone to manage your money, you care a lot about how much money they charge. Like, what is their fee? But you also care about how good of a job they do.
Sure.
And so I think the nice thing is, since we're tying this to the result, we're still allowing for this role of skill and for people who can deliver better outcomes to monetize that. And then we'll let things settle where they are. And if that's a smaller fee pool, I think that's great. I have no problem with that. Presumably, and what we would tell agents is, while that sounds scary, again, total transparency, while that sounds scary, presumably, if you have all this competition, you might drive out the less competitive people, and you might have the most successful people winning a bigger share of transactions. And so if you're a really good agent, a smaller fee pool could be okay for you, as long as you're kind of like maybe in like the upper half of the distribution. If you're in the lower half, like this is probably problematic because you're probably getting crowded out. But if you're in the top of half, it's not clear to me that a smaller fee pool is problematic for you if you're winning a bigger share of deals. So that would be kind of my pitch to agents of like, maybe, if you think you're good, don't worry about this smaller fee pool. I mean, if you're not good, like this is a problem. But most people probably think they're good, so they should be okay with this.
Sure. And you have some materials that discuss the kind of the difference between, an agent with high skill and an agent with low skill. And obviously there's some Lake Wobegon effect here where almost everyone thinks they're above average. So, they're not going to tell you whether they're high, they're low skill. But if I'm sitting in the seat of a homeowner, how does your platform, if at all, help people understand, or get a sense for the skill level of the agents they're selecting between?
Yeah. So, I mean, to go back to our example earlier, I mean, well, one, I would just agree with you, right? I mean, there is very much a Lake Wobegon. Everybody does think they're good. The nice thing from a homeowner is for the first time, if you use this, you do have an objective way to assess skill, because right now, how are you going to decide who to hire an agent? If you pay them a flat percentage, let's say you meet 2 or 3 different agents. You're like, yeah, I should meet multiple agents. And you're just going to pay them a flat commission. Who are you going to decide who to hire? I mean, the one you get along with the best, the one that you know from like, someone else knows, the one who tells you maybe they can get you more money for their house. The problem is, why should you only hire people who like you get along with? I mean, it's important that you don't hate them, but that's probably not like the most important thing. And then if you hire someone who says they can get more money for your house, they could, like, there's nothing that ties that to reality. If someone comes in and says, oh, I can get you 1.1 for this house, this $1 million house, like, they can just be blowing smoke. And agents have a term for this called buying the listing, where they just kind of inflate things. And agents say, oh, I focus on repeat business, I would never do that. But the incentive is just so strong. Like, how? And so the nice thing is, well, we just say, well, if you wouldn't do that, then that's great, because if you speak honestly, then all we're doing is leveling the playing field, because no one else can do that to you now. And so the nice thing about a platform like this that ties the result to the compensation and having this variable percentage is that what you pay your agent is based on what they do, not what they said they would do up front. And so everyone can tell you they're above average, but if some agent's bids tells you their participation price is going to be $950K and another one says $980, this agent really they're either more skilled or they're willing to do it for less money. But either way, they have the exact same incentive to get you the best terms. And so as a homeowner, you're taking now much less risk in who you hire than when in a traditional world where you just have to trust the agent and see what happens. Now the amount you pay will be linked to how good that agent was. And then also you're going to see agents, obviously the other, and I guess this is a little bit longer term, but the other really exciting thing about Listwise and what we're doing is, if you imagine doing this and getting many, many agent transactions and doing this over years, we can start to infer agent skill. And so we'll be able to, like, it's not just who bid you the best, because as we get, dozens of transactions about agents, we say, well, this agent typically on average earns a 2% spread to their participation price. This agent earns 5. So even though this agent bid, $980 and this one bid $950, we can actually infer what we think the final sale price is based on their prior bids. And we can estimate agent skill. And then once you can start to do this, you can start to really improve the industry, because now it's no longer like a single game. With all the data we can collect, we can make this a repeated game on behalf of homeowners, and people can start to make smarter, more informed choices. So I mean, that's like a multi-year. We're kind of probably a few years out from being able to do that, but longer term, that's the vision. Is to be able to really infer agent skill directly.
Sure. And I think you mentioned in that response the concept of kind of risk mitigation from the seller's perspective. Is the benefit to a variable commission structure in your mind more about seller risk mitigation or more about incentivizing an agent to work hard on the seller's behalf?
So I don't. I think it's just both. I feel like the nice thing is it's like we don't really have to choose. I mean, they're both just mechanically part of this process, and you just get them both, and you get them both fully. I mean, there is risk reduction, which I think is something that a lot of people don't fully appreciate, because you're after commission proceeds sales are less variable in this model. And so there is absolute risk reduction on behalf of the homeowner. And at the same time, there's totally increased financial incentives for the agent to grind for every little bit, because now they materially participate. And so they're both, I mean, and I guess we've seen on different homes, different ones play out. I mean, I can think of ones where I feel like we've seen an agent where for one particular deal, this idea of incentive was a bigger one. Like, we had a homeowner where they listed it, this agent thought they could get more, they listed it, and demand was, they had the best bid, they were probably 100K above what other agents thought they could get. They listed the home, and that agent was right, but they got multiple offers, and it went like above that price. I think if you didn't have this incentive commission structure, it would have been really easy for that agent just to be like, oh, this is good, I'm done. But because they knew they were getting 20%, like they still ground it out for like another 25 grand because they could. And so as a homeowner, like knowing that your agent's going to do that is great. I think there's been other times where that risk reduction was kind of the bigger factor for a homeowner. So I think it kind of depends, like, how many buyers showed up for your home? There's a lot of, I think every homeowner is going to experience that differently, but collectively we see them all kind of playing out in different ways on different homes.
If I put myself in the shoes of one of the bigger, I guess, franchisors or whatever you want to call, like a Berkshire or a Sotheby's or a Compass, these people who whether they just kind of have agent groups that are affiliated with that, or they actually work for the company. Like, I could see some of those groups saying this is a threat to the total level of commissions that we can garner, and as a result, we forbid agents that carry our flag to work with Listwise. Is that something that you've come across where there's been, there's just some uncertainty about whether this is positive or negative, and you've seen some of these larger firms try to say, well, yeah, that's fine, but that's for the independent agents kind of thing?
We have seen some agents. I mean, there's definitely some agents who will be restricted from doing something like a non-percentage commission because they don't want to establish that precedent.
Sure.
I don't think we've seen it like at the, like, I don't think it's a big enough issue that we've seen anything at this national level, but you've definitely seen it in like regional offices. So I can definitely think like in Florida, there, might be a brokerage of like 100 agents, and, they might have to get some approval from like a regional authority in that, like, Sotheby's or Berkshire, and then they have to get a regional approval, and that person will just be like, no, you can't do this. I would say it hasn't been that common, but it happens. And when it does, I'm like, I get it. Like, and sometimes the agent will even say, like, I would like to do this. I can't. I get that. Like, from an industry perspective, this is a precedent you might not want to do. Again, I think it is homeowner friendly. I think it encourages competition. Like, I think this is actually healthy for the industry. So I would argue, this is a good discussion to have, but not everybody wants to have it. And I think it's understandable.
Are there any analogs that you can think of? Like, my mind's swirling about like what the like you're in the early innings of something, and I'm trying to figure out what the comp is. Is it like I don't know, Expedia and Booking taking, basically taking over the online, basically creating the online travel industry and creating a lot of transparency in hotel and airline pricing. What any analogs or companies that you've studied that's like this is kind of where this company was in its first or second inning?
Ooh, you know, there's not anybody that I feel like. I guess the parallel is not really strong, but I'm the first thing that comes to mind is someone like Vanguard, which is very disruptive to the financial services industry.
Sure.
And what I think, and the only reason I draw that parallel is because what was interesting is Vanguard started with this mission about bringing down costs and delivering better results to kind of this end individual investor. And what was interesting is in the process of doing that, today we accept it, and they're I think most people think what they do is amazing. I certainly do. But what's interesting is along the way, people, they got labeled like un-American, anti-competitive, like they got leveled all these criticisms against the model that I think have shown to be kind of unfounded. And I guess on a day-to-day basis, I think that's something that we feel a lot. We would argue that we are homeowner-centric, but doing something that is in the long-term interest of good agents and those that do add value. Because if you play this forward, I would argue if you don't do something like what we propose, the only way you can compete is on fees. And then that is a race. If you're an agent, I would tell you that is a race to zero. Because if you don't find a way to demonstrate your value add, you are only competing on fees, and then we might as well, you can try to hold out as long as you can, but they're going to get squashed to some very low number. I personally think that agents can have an impact on the price, but it's not huge. But I think, they can make a 2 or 3% difference. And so I would argue if you want to be an agent that doesn't want to have in this race to zero, we're like giving you a lifeline, which is like a way to add value. And so you should embrace it. But many people will not feel that way and would like to, kind of keep them high and find that the safer route. But time will tell whether or not that, which strategy was right or wrong.
I think that's a great parallel. I hadn't thought of that one. And sticking on the fee topic, there was recently a big settlement with the National Association of Realtors that caused a mini earthquake in the industry. Could you talk about that settlement and how you'd expect it to impact both the industry and Listwise?
Yeah, so there was there's a series of lawsuits in multiple states where basically the National Association of Realtors and most of the large brokerages that you mentioned earlier were sued and they lost. And so there have been people in the real estate industry have been freaking out about this, and it mostly affects how buyers are compensated, because before the seller had to offer or specify the compensation they provided to the buyer, they could have just offered $1, but then that created all kinds of perverse incentive problems, like you're afraid people wouldn't show your home and things like this. So even though the amount wasn't specified, you had to pay, and because it was shown what you paid, that created all kinds of problems. Now they're not allowed to display this, so that's kind of a potentially helpful change. I'm skeptical, we don't have to get into it, but this will actually change that much, because sellers are ultimately the ones with all the proceeds. And so it's easier for them to pay for the buyer's agent, not just, there are other reasons why this is done beyond just the way the rules are written. So I debate how much things will actually change on the basis of this, but a lot of people in the real estate industry it's very widely talked about. As it relates to Listwise, since we work really with sellers, it really has no direct impact on what we do, because it really affects buyers. It affects us a little in that we kind of try to educate sellers on, kind of the optimal strategies and how they should be thinking about this, after the lawsuit. But it doesn't directly impact our business model beyond just education. The biggest thing it does for us, which is kind of a pretty big positive, is it makes real estate commissions more topical, right? I mean, there's a multi-billion-dollar lawsuit that got lost. This is a big deal. and people talk about commissions. And I think one of the big problems is, we talked about earlier, you said, like, what are the mistakes people make? They don't talk to multiple people. Homeowners and home buyers don't realize like how much power they have. And the nice thing about the lawsuit is it kind of makes people realize, like, oh, you do have a lot of power, not just because you won a lawsuit, but actually you already have a lot of this power. And so I think the lawsuit, if it helps people realize the power they have, that impact is far bigger than the settlement. And I think that's really also why a lot of these, why everybody settled, why many people settled, because they just want the lawsuit to go away. Because the longer these things linger and we talk about them, that is what's really bad. Just paying, X number of billions of dollars and moving on with your life and preserving the status quo is the best thing the real estate industry could do. The lawsuit is dangerous only if it changes that status quo and people start to do things differently.
And buying a house is likely one of the most infrequent purchases, and selling their home an infrequent sale a person ever makes. As such, people are often not educated about the process or up to date on any changes. How does someone find out about Listwise currently?
Hopefully via people like you who have, kind of platforms that kind of help us get the word out is critical. We spend a lot of time, what I spend most of my time on is kind of doing outreach to people who I think should care about what we're doing. So if you think about people who report on housing, your major news outlets, people who are interested in consumer education, financial advisors, all these people, like anyone who has an interest in kind of helping people make better decisions, we want to try to make sure that they know that we exist, so that they can, kind of know that this is an option. And so that's what we spend most of our time, is kind of like how we try to think about reaching that end consumer. We don't do a lot of we've tried various things, mailers, social media advertising,
Sure.
search advertising. In the real estate, because commissions are high, people spend a lot of money on advertising. And so the space is very crowded. And so, if you want to advertise in real estate on Google, on some kind of search term, it's very expensive. If you want to send out mailers, you're like one of a stack of, 10 other mailers you got that day. It doesn't really kind of leap through. And so we found all those kind of ways very saturated. And for us, we want to keep our referral fees really small, because we are kind of very mindful that ultimately this all reflects in consumer cost, and homeowner cost. So we want to keep those referral fees really small. And so because of that, that's why we try to, again, mostly reaching out to people who we think, have touch with consumers, of people who will, kind of understand and resonate with our model. And then, that plus kind of referral, word of mouth is so we're kind of have a very organic approach. And then, specifically the goal of all that organic and referral stuff is to kind of hopefully have people go to our website or reach out to us, directly, mostly via our website. And then we have a call with them, right? We have a call, and then you have this very human connection where it's like, okay, let's talk about your house, your problems, exactly what we do. And then we usually have a 30-minute call, and it's like, let's, this is a real person, and we'll go through your exact problem and figure out, and explain to you how it would work. And can we, help you solve this problem and get a better result when you sell your house? And so ultimately all of it leads to kind of hopefully having a 30-minute conversation with a homeowner, where they're just interested in learning more. That's kind of what everything leads towards.
And how does that model scale in your mind? I mean, there's a human touch, which I think is really important, but also, if you're doing thousands or tens of thousands of transactions, all of a sudden that's a big team, lots of hand holding. What does this looks? How does that change at all, if at all, when you start to scale more?
So that'll be like a big challenge. I mean, hopefully by then we will have figured out how to communicate this, because this is still a very new concept, right? I mean, it takes a long time to communicate this. And I've been surprised, because to me, we see two things. We see some people who have a call and they're like, I've thought of this before. I always thought this should exist. I get it. And it's just like, and it's so fast. And then there's other people where it is a very long educational process. And that's true for homeowners and for agents. We see some agents who get it really quick and some who it takes a long time. So hopefully we will get better at educating people and figuring out how to do this quicker, and I think as we scale, you'll increasingly rely on maybe you can have some AI assistants that will change things. Maybe you'll have some pre-canned videos that'll do a lot of this, because as you get bigger, you can kind of maybe have a little bit of a more, kind of a video tutorial that will explain this. Right now, we do each one of these individually. Myself, my co-founder, or kind of one other person, talks to every homeowner we work with. Oh, it's very inefficient. But also, you do things in the beginning that don't scale.
By definition.
Yeah, which is very much, we're still in this, doing things that don't scale. And in fact, I mean, that's probably one of our biggest mistakes was early on, was trying to make things scale. That's probably one of the things that we, regret the most, was focusing on scalability too early.
And I think one thing that's required to be really successful in any new venture is to truly understand who your customer is. And I'm not talking about customer profiles. I'm talking about who, in this case, is the customer, because the seller is, is someone you're working with, but you also need to, the referral fee comes from the broker. So when you're looking at the ecosystem and the various players in it, who do you identify as the customer?
So, it's interesting. When we originally created this, and actually I think this will when we originally created this, we actually originally created the idea to be more of a platform. So it was going to be a platform where homeowners could come on and just put their home on there, upload some pictures that they want, and then agents would all compete, and we would just be like a matching service where agents could see what homeowners wanted and, or who wanted to find an agent, and they could all compete directly, and we would just be this platform. And what we realized was that both sides needed way more education on this to make this work. This could not work as a platform. It was not right. Homeowners needed way more education, and agents did too. And so we kind of totally changed it to a much more like this, what we do now, which is a very concierge approach where it's very hand-holding on both sides. And so fundamentally, the homeowner, without a doubt, is our most important person. They have to be happy and perceive value. Sure. And that is the ultimate person that we think, who do we want? That's who we think of as always as number one. But to your point, you need the agent, and they're an integral part of this. And I truly believe we can help them compete and add value. And again, we're pretty transparent with agents, and I think this kind of comes through in our conversations. But that ultimately, who we're looking out for. But what we've seen is that agents who are good are totally fine with this, because agents that are good will also tell you that the homeowner is who they care most about. And so in that way, you kind of realize this all does point to the homeowner, because any good agent realizes that they need the homeowner, because ultimately they pay them. And so, ultimately this isn't actually inconsistent that we get our money from the agent. Because again, ultimately that they get their money from the homeowner. So I think good agents will tell you their biggest priority is the homeowner. And so us, having that as our priority should, I hope not really turn off too many good agents. And if it does, or if agents are turned off by it, then, That is what it is.
What's the hardest challenge you are constantly bumping up against? Is it just the education process, or is there some other structural barriers that you seem to be, kind of trying to crack consistently, considering the degree to which this industry has been very stable and system, there's just like a system here that has functioned for a long time and in a way that hasn't really evolved.
I think, it's kind of like this intersection, but you mentioned earlier this idea of, selling or buying a home is something people don't do very often. And so I think the latency of that makes makes the status quo very sticky. And but that relates to education, because if you don't do it that often, it's hard to learn a better way to do things. It's hard to try. And so again, I think these are all related, but I think it all comes down to education, but it's hard because the latency is something, it's a very low frequency event. And then this also relates in, kind of getting the word out and making people aware is also a challenge, but that also relates again to kind of education. I mean, that's a problem that everyone has, right? Is how do you get in front of people at the right time? And that's just like a subcomponent of education. And just kind of making sure that your message gets out there. So, I mean, again, I think it all relates to, you could call it education, you could call it, to me, it all fits under that. But within that, you need to have, kind of the marketing, and do it in a way that's sustainable. Because I do think the reason that it's been so sticky is because, and people have tried to disrupt this industry and throw a lot of money at it. And I think what the problem is that you've had a lot of upstarts that have failed. And I think it's because it is very, it's hard to get people to do new things in something that they do so infrequently, so irregularly.
As I'm thinking about the other players in this ecosystem, I'm curious of what your views are on the Zillows and the Redfins of the world, because as a homeowner, the existence of those platforms and transactions that whatever they estimate the value of your house and they send it to you every couple months, right? It's interesting that you're empowered, at least in terms of the price you can get, in a way that wasn't true 20 or 30 years ago. So I'm curious if you have a view on whether those other players who I think have increased transparency in the industry are helpful or neutral or harmful to what you're trying to accomplish.
Yeah. So let's take the two you mentioned. So one, start with Zillow. I think Zillow does a lot of really helpful things for people, right? I mean, it makes a lot of data available. So it's like if I have a home and I pull up my home, I can see other nearby homes. I can see what they sold for. And that's powerful, helpful information. That's great. The part is, obviously Zillow is going to give you a valuation, but it doesn't really know like the condition. It can get you in the ballpark, but it doesn't know so many details about your home. And so that's again where I think why agent skill is so hard to say. Like just knowing how did an agent sell the value of their homes versus estimates. This isn't enough to infer agent skill. Whereas something like what we have, you can get a little deeper in that. The one thing I would say that to me is, I think a lot of people don't know about Zillow. So Zillow, if you go on their website and you go to the agent finder tool, and then you like get an agent through Zillow, the agreement Zillow has with their agents, they take a referral fee from those, and they're often 40%. And wow. So when you use Zillow and you use them to get in touch with people, there's a lot of fees that you're not seeing there, and that's inflating industry costs. And a huge share of Zillow's revenue and profit comes from these fees. And so to me, Zillow's been great for transparency. They're also a really big reason that fees stay high because they take such a big share of an agent's final commission. You think you pay your agent 2%, but Zillow took a very large portion of that. And so you kind of put that into context when we think of like our 10 to 15%, Zillow's taking, often, close to triple that number. So that's my problem with Zillow. Redfin, I love Redfin. I've used Redfin to sell a house about 5 years ago. Used Redfin. I used Redfin to buy a house probably 10 to 12 years ago. I like Redfin a lot. I think they have been a fabulous force for bringing down costs. I talked about Vanguard earlier. To me, like Redfin is kind of like Vanguard, right? They are the low cost provider. They're going to give you what I would say is a pretty quality product at a really good fee. But Vanguard's great. I own a ton of Vanguard funds. I also own a bunch of private funds, and people invest in all these other vehicles that charge incentive fees. And so the way I think about us I think of Redfin as being like the Vanguard of the real estate space, and that they're a very powerful force. And I would argue that we're kind of like saying, well, if you want a better result than and you want someone to care a little more and really grind out, then this is the approach you should take.
Sure.
And there's room for both, because you need to have this very low cost option and you need to have this value add option, and these together make the market work. What you don't want to have is people who are just like, pay 3%, trust me, it's all good, and I'm not accountable. And so, I think if you take take this analogy of like Redfin and us, obviously, we're small at the moment, but play this forward, there's a lot like how the investing markets have played out. You've got Vanguard, and you've got a whole bunch of private managers, Blackstone and Ares, but like all these guys, and they're bigger than ever. But who got hollowed out was like the active equity manager that charged 2% of assets. That guy is just, and that person shouldn't exist. If you want value add, there's a way to get that and to pay for that. And if you want, low fee passive exposure, there's a place for that. But 2% for a mutual fund that's going to pick 100 names of equities, like that's a crappy model. Yep. And today in real estate, we've got that. And my hope is that we'll follow the investing world and we'll, kind of segment into Redfins and incentive commission people. And that will be, 20 years from now, that'll be the world we live in.
Earnings season. 2 words that can make any analyst's heart race. The late nights, the endless manual updates, and the constant pressure to deliver timely, accurate insights. It's overwhelming, but it doesn't have to be. With Delupa, you can revolutionize the way you work. Their automated model update solution takes the manual effort out of the equation, delivering complete, accurate, and real-time financial data at the click of a button. No more endless spreadsheets, no more scrambling to keep up. Delupa empowers you to initiate coverage faster, refine your investment theses with confidence, and focus on what really matters, identifying key opportunities and delivering actionable recommendations that drive results. Plus, with fully auditable data, you'll always have the confidence that your insights are backed by accuracy. So if you're ready to get ahead of earnings season and take your analysis to the next level, visit delupa.com/COMP today. Delupa, because your time is too valuable to spend it on data entry.
And as you're thinking about your path to success, what are 3 or 4 things this company has to get right for Listwise to be a huge success for you and your employees?
I think one would be showing that homeowners that they're paying less. So like ultimately in time that this fee is down, and then also being able to to tie back and show that this does produce better results, like that there can be some skill involved. Because if there's no agent skill at all, then this should all just kind of collapse to just competing on fees, and there's no need for this. So I think the idea that you can have a little bit of agent skill, a little bit of different outcome due to pricing and these types of things, that's important. And so far we've actually seen that. I mean, if you look at that, we get, if we take 4 agents and we ask them for where they'll set their participation prices and what they think they could get for your house, we typically see like a range of like 7% from like high to low. And so between the high and low agent. And we've also seen that on average, agents who are that high bid actually deliver on that. And so I think that's what we've seen, kind of on our sample data to date, but that continuing to bear out will be key. So far I think, signs are good, but we want to continue to see that, pattern continuing.
And if we're having this conversation again in 7 years, how would you define success at Listwise?
So to me, the thing that would make me feel the most successful, that would make me really happy, is if the idea of incentive commissions were commonplace. So one of the things that, so if you check out if you go to our website, you'll see there's we talked about education earlier, and to me, we really believe in education, and so much so that we created like a free DIY guide to incentive commissions, and it tells you exactly how to do this yourself. So if you want to do this yourself, you can. And so to me, I would feel like this was successful if that idea became commonplace and popular. And I would say that most people think that they need help implementing this. And so, then they reach out to us and we take care of everything and do it all. That's great for Listwise, but really to me, success would be even if everybody just said, no, we can do this ourselves. We don't need someone to do this for us. To me, that's fine. To me, the popularity of incentive commissions is really, to me, the biggest thing that I care about. I think then, you'll find there'll be some people that won't want to do it themselves, and we can do it for them. But if everybody can do it themselves, I would feel like we were super successful.
I think there are a lot of analogs and comps where very successful companies put the customer first, and not just the customer's needs first, and evangelize that, whether it's Vanguard and low fees, whether it's Costco with everyday low price, right? Like, and $2 hot dogs, like just all of that those people who are just, absolute maniacally focused on adding value and changing a paradigm for the customer. I think that's why I was asking about analogs. I think there's a lot of similarities with what you're trying to do here, especially in an industry that's been very slow to change. So I'm excited to see where this plays out, or how this plays out. So let's close with our favorite question, and then when we ask all our private company execs, what do you think is the most misunderstood aspect of the opportunity set in front of Listwise today?
So I think the biggest thing is this conception. So often we get asked about why would agents agree to this, or people assume that it is in the best interest of the homeowners. And to me, the biggest misconception is that there are like kind of two sides to this. I really think that the homeowner, that ultimately everything has to work for them. And if we can solve this problem of making it so that they see that they can see the value their agent added, that is the best way for the agent to maximize what they pay. Just be able to say, I delivered an outcome, and that's why I got paid this much. And so changing this from, a view of competition to just incentive alignment, and realizing that by aligning incentives that we produce better outcomes, I think is the main thing we focus on. And so often people, again, think about this as, agents versus homeowners as like two different sides, as opposed to thinking about, how do we build the right structure so that, it really is win-win. And if it's not win-win, then, both people share in kind of the weak outcome. It's not like, so I think that is really the key, is we're really trying to make it win-win, but when it's not win-win, that the agent and the homeowner kind of share that pain, in kind of like in a fair and equitable way.
Well, I think that's a hugely worthy goal. And I really appreciate you spending the time walking through the weeds with us to understand exactly how this works. And I'm excited to see where this, where this idea of a variable commission, where it leads over time. So, Nic, thanks for being on Compounders. It's been great to chat about this.
Yeah, thanks so much, Ben. Appreciate it.
Nic discussed a number of securities on this podcast. I do not own any of them.